Carvana, ticker symbol CVNA. It's a stock that we've been following very closely for the better part of the past 4 to 5 years, and we ended up making a very bearish call just coming out of COVID in 2022, and the stock at the time we were looking at on the short side ended up dropping, like 98% down to like $3-4. It's now all the way back up to 50-ish dollar stock. Company just reported earnings, and I think we're starting to see the stock begin to wobble. Just quickly before we look at the charts a little bit more, the main concern that we have about the company is really that it just has too much debt. And you can look at the profitability ratios, like gross margins are in the most recent quarter were like 21%. Which is essentially, I think, as far as I can go back, about as high a margin they've had at least since 2019. We just don't think that's sustainable. And it really has to do with the debt load that they have. If you look at that company and you look at the debt load, that's these down here in the bottom left-hand corner, was that pink lines? Yes, they now have positive free cash flow and a lot of cash and cash equivalents, but we just think that ultimately this is going to catch up to them, and it's going to really hit margins. So what we're seeing in many ways is a company that has obviously gotten more or it's not that obvious, has gotten some companies that grow a lot don't have this problem, but this is a stock that price to sales is now currently trading at least as of the most recent reading here, closer to 1.85. Maybe it's 2. I don't know exactly what the latest. Actually here it's actually 3 now. It's even worse. Okay, so never mind. So it's gotten worse and worse, like higher and higher over the course of time. And so when you look at the stock here from a technical perspective, it's holding on still. It's still in a bullish trend. In fact, our market rover confirms that this remains a bullish trend. That's the green background color, and by the way, just another reason to use the market rover. You can see how it went from bearish trends, that's the red background color there on the left, ultimately turned into a bullish trend around $23. It went up as high as 290. That's 1,118%. It's currently still up about 900 and something percent, but I think we're going to see it start wobbling. It remains in a bullish trend. Again, that hasn't changed, but I think it could start changing here over the course of time. And typically, that's a good thing to maybe start taking some profits on something as if one is long the stock. On the daily charts, just to give you a little bit of perspective here, what's going on, this is now the technical aspect of it all. What we've seen is the stock essentially break above its previous all-time highs right before earnings. This tells you that the type of people that are involved in the stock are either a lot of algorithms and machines, or retail investors that don't know anything about the fundamental stuff, that are just looking at a chart and someone on YouTube told them or Twitter told them that it's breaking out. And of course, then it gets clocked by 12% after earnings. Now, it doesn't mean the stock is over just yet, but I would watch this very, very closely. I think particularly if we start losing sort of the 150 period moving average, that's around $200. That's also a psychological level. I think this is going to become a problem that will be more apparent for people now. As I'm recording this, that's still another 20% away. To a lot of people, it's unfathomable to think that this stock will drop 12% and then 20%. But that's typically what tends to happen in a situation like this. So maybe a bit too early to get super bearish on it. Definitely a bit too early because of the trends remain there. But I think underneath the surface, something we want to pay close attention to. Hope it helps. See you in the next video.